Hello there.
Hello, everybody. My name is Eamonn Connolly. I'm manager of Newry Bid, and I'm delighted to chair this workshop on access to finance and support programs for small business. Just going to set the scene because I think we have a few people still to come in. Access to finance has always been important, but particularly so now with the change in capital markets arising from COVID. We're very lucky today to have some illustrious presenters in Feargal McCormack, Managing Director of PKF-FPM Chartered Accountants, who will speak to us on access to finance and funding. Feargal will be followed by David McComb, Director of Full Circle Management Solutions, who will talk to us about accessing support programs. And then David will also speak to Brenton Cardy from Killowen Distillery about his case study. Just before we get into the meat of the presentation, some housekeeping rules to start. I'll just let everybody know this workshop is being recorded. I would ask that all attendees remain off camera and on mute throughout unless instructed otherwise. We would remind the attendees to put questions into the chat function. We will try and answer as many questions as we can at the end of all the sessions collectively. This is crucially important because we are on a tight time schedule. And at the end of the session at 12:35, we will automatically be ejected and go into the plenary session with Gráinne McCoy. So with those housekeeping rules and given the tight time frames, I am delighted to introduce Feargal and let him impart some of his knowledge to us. So Feargal, over to you.
Thank you very much, Eamonn. I'm just hoping to share my slides with you here in a second. And I must say, enjoying the conference so far, Eamonn. It's very, very good.
Thanks, Feargal.
I hope you're seeing my slides coming up there now.
All good, yes.
Okay, well, look, as I said, I'm delighted the opportunity, obviously, to share with you some thoughts over the next 20 minutes or so on access to finance and funding. And in that concept, we'll talk initially about the changing funding market and sources of finance. Certainly a very changing banking landscape at present, and ultimately we'll touch briefly on lender assessment, because obviously if you're accessing finance, you've got to also be conscious of what the person on the other side of the table is thinking and doing. In terms of the changing funding market, you know, it's hard to believe that the artificial intelligence expert in 2019, Callum Chase, said in Forbes, I don't think he could ever envisage when he said it, that change has never been this fast. It will never be this slow again. Hang on to your hat. The 2020s are going to be astonishing. I don't think even he could have envisaged what COVID-19 and the pandemic has brought to us. And, you know, whilst there currently are high levels of liquidity within the business market due to, let's be fair, government supports, and we'll touch on those briefly there, it is essential that firms of all sizes understand the complexity and the fast-paced dynamic of the funding market. I mean, COVID-19 is not the only factor that threatens to tip an at-risk business into a fully fledged funding crisis in our experience. Even those companies operating under lesser market pressures could inadvertently fall out and fall foul of the changing banking regulations landscape. So what we're really trying to highlight during the course of this presentation is that many businesses are facing a crucial moment that requires them to increase their level of financial sophistication and indeed governance in order to successfully access finance. Now, interestingly, Brian Reid in his excellent presentation covered the whole concept of purpose a number of times. And you'd be amazed as one who reads quite a few funding applications, how often you're well into the document. You might even get to the end of it, unfortunately, and you haven't read yet what is the purpose of the funding requirement. So the very first lesson for us all, if we're trying to access finance, is to pause a second and clearly identify what is the purpose of the funding we're seeking. Because believe it or not, depending on the purpose will greatly influence the type of funding you require. For example, if you're funding cash losses, that's totally different to funding a capital investment. As is, believe it or not, working capital management, which we'll talk about briefly. Research and development, we'll not go into today, but to be upfront about, if you're funding that, it could be personal resource, it could even be venture capital finance, it could be grants, or indeed it could be what's called tax R&D credits. International trade, again, Brian Reid, you heard going into now, more sophistication in terms of funding international trade, different methods, letters of trade, etc. And obviously, if you're buying out a business partner or a shareholder, totally different to the other forms of finance you require. And finally, business acquisitions, a little bit more significant, but it's happening more and more also for small businesses. So I think what we're really saying here is that, in terms of accessing funding, it's important to first of all be very conscious of what it depends on. And it depends first of all on the level of funding which is required. We've already said obviously the ultimate use, the purpose, the stage the business is at, and the timing of the venture. Believe it or not, that's also quite significant in terms of accessing finance and what is most appropriate. And whether you're willing to set a percentage of your business in return for some investment. The business existing funding structure is important because, for example, if you're already heavily geared, a traditional bank loans or bank finance may not be the most appropriate. And obviously, the business's working capital mix is very important. So the most suitable form of finance option really depends on those many things. Now, in terms of sources of finance, it's fair to say that there are a number of different sources of finance, and cash flow can come from within the business. That can be renegotiating with existing suppliers. That could be using existing cash resources. That actually could even be looking at your current asset base and seeing if the assets that aren't encumbered, could you raise some finance on them? Working capital finance and management we'll cover in more detail later. In terms of COVID-19 supports, obviously they are available and we'll touch on them again briefly. Bank debt we'll focus on more because of obviously the changing bank landscape. Promoters equity, fair to say promoters equity is different forms. In terms of a sole trader, it's the capital you introduce even from family and friends. Once you get into a limited company, it's ordinary shares, preference shares, or indeed quasi loans. Grants and financial incentives, thankfully David will cover a lot of that in his talk. We'll just go over very quickly. Alternative funding sources I will focus on a little bit more as we go through the presentation. But often the most appropriate means of securing finance will be a combination of these funding sources. And to be fair, the most important thing for you is to try and determine the optimal source of funding. It's also important in any form of negotiation to be very conscious of the objectives and where the person across the table is coming from. And in this regard, you need to have an understanding of the risk and reward that faces a lender. And be honest with you, low risk when they're guaranteed, for example, debt, they're guaranteed repayment whether you make money or not, they get a low reward, low interest rates. Where at the other end of the scale, equity, for example, an equity investor being you personally, or indeed a business angel or venture capital or whatever, they expect a high return because if things aren't going well, they get nothing. But then if things go well, they get a high reward. So that risk reward schedule is important. Now, it's also important to appreciate that working capital and cash flow management is fundamental to the whole concept of creating finance within your business, but also in terms of accessing finance and creating a credible proposition to any potential lender. In terms of working capital and finance, there's really three core elements. There's debtors, which is your receivables, how you minimize the period for your business to get paid and what processes you put in place to achieve that. There's creditors, which is the opposite. It's the length of credit you get from your suppliers and how you manage that. And finally, probably one of the most important, because it loves cash, it ties up your cash, is how you manage your stock and your work in progress. And again, within any of these, we could give a seminar for an hour, but you've got to be conscious of them in terms of accessing finance. Now, in terms of the COVID-19 supports an unsecured loan, it's fair to say that many of the original schemes have now closed or will be closing soon. You now have the new recovery loan scheme, which has come in to replace both the CBILS and the bounce back loan, which obviously the last applications has now passed 31 March. And it is providing funding up to about £10 million for individual businesses, indeed 30 million for groups. I don't think too many will need that, hopefully. And support can be secured via term loan, asset financing, invoice discounting, or indeed the bank loan facility. The scheme is flexible, it does meet the needs of business, and certainly government will continue to provide the 80% guarantee to the lender. But please remember, the borrower does remain 100% liable for the debt. There seems to be a misunderstanding now again among some borrowers in that regard. Now, it's fair to say the recovery loan scheme has been slow to take off, probably due to a number of factors. Obviously, the availability and people have got CBILS and bounce back, and also the perception that it's less favourable terms to CBIL loan in regard to interest. For example, you start paying interest immediately. But be fair, there's no personal guarantees up to 250,000, and again, your principal private residence is not there for collateral. So that is quite important. In terms of the bounce back loan, I'm very conscious that people are now starting to prepare to pay those back. Excuse me, you should be conscious if you're not of the pay-as-you-grow scheme, which allows you a little bit of flexibility to negotiate with your bank in terms of payment. Certain things, like for example, you could negotiate a deferral of interest for 3 6-month periods at different times during the period of your bounce paying it back, or one period of total deferment of both interest and capital, 1 6-month period. Now, I think one of the most important things to appreciate, and I'm not sure, and this is not bank bashing because it's not their problem, actually, it's regularly, but I'm not sure people have yet grasped that a lot of the issues they're currently finding out there is actually being driven by a changing bank landscape, which in turn is being driven by a changing bank regulatory framework, which is actually outside the control of the banks. But what's actually happening is that mandatory regulatory directives to banks to enforce financial contractual obligations on borrowers and the management of non-performing loans is now having a major impact on virtually all businesses. I have not gone 1 week in the last 12 weeks that I haven't got at least 1 or 2 phone calls out of the blue from a client saying, my friendly bank manager was on, no issue, but he was asking me questions he hadn't asked me before, like what capital expenditure you plan for the next year, etc. And what you then simply said to them is, what is your bank facilities letter say? Oh, where's that? And they go and pull it out, but they didn't realize they're now starting to be implemented much more. So what's happening is that non-performing loans, remember, from the bank's point of view, they hit them now because actually they impact the bank's ability to lend funds into the economy and to other people, as they're required now to put funds aside to compensate for losses on non-performing loans. So that's having a major impact on access to finance for small businesses. And lenders, for example, again, be very conscious of this. They're now issuing shorter term loans to preserve their capital base. So what you're seeing is, yes, you can still get a 10-year loan, but I would be amazed if anybody has got a 10-year loan in the last 3 years that doesn't actually have a 10-year repayment profile, but actually more likely a 3-year committed facility. The difference there is the lender has the right after 3 years to walk away. They have a right to reconsider whether they want to continue. So it does create potential for funding crisis. To be fair, in normal circumstances, the lender would not wish to walk away. So what we're really seeing here is a non-performing loan event can be triggered by many things that you don't maybe think of: missed payments, unpermitted overdrawn positions. Being, for example, if your bank facility letter says you must tell the bank, even you're not going to the bank to get the money, about a certain event, and you don't tell them, you're in breach. And more importantly, the most common thing that we're finding now that people never read before in their lives, because the truth is most of the banks in Northern Ireland, most of them, didn't really implement them, thankfully, is the bank covenants. They're now fundamental, and you've got to be sure you're adhering to them. So what's changed? Well, the reality is, as a result of this environment, this regulatory environment, banks are increasingly digitalizing the lending process to enhance their own efficiencies. They're using auto scoring and behavioral scoring to make faster, more accurate and consistent lending decisions. I'm not sure they'll admit that, but I suspect if you're borrowing less than 300,000 at present, for most financial institutions, Eamonn might come in and hit me here and say not the credit unions, but for most financial institutions, the reality is they're probably engaging in this behavior already. And believe it or not, another very significant point to be aware of, that I'm sure you haven't been told, but you should be aware of it, banks are now required to share their credit data with credit reference agencies, which facilitates the whole concept of auto scoring across the industry. And in terms of loan sales that we're all seeing, they may well continue or increase as some of the lending institutions exit the market. This will have a major impact on access to finance, and others continue to seek to manage and reduce the stock of their non-performing loans. Now, these are important, and the result of this really is, and the core to my message is, that a good financial track record is not just desirable, it's critical going forward if you wish to access finance. And it's just like a personal credit score. Businesses now need to really fiercely protect their digital credit footprint. Now, in terms of bank finance, which is still the most common form of accessing finance for small businesses, 4 core banking products. You have working capital finance, which is overdraft, invoice discounting, and stock facilities. You have asset-backed finance, which is normally finance spread over the useful life of the asset, hire, purchase, lease, or chatels. You have business growth and expansion, which is normally commercial loans, and then you have some specialist loans and small business loans, and indeed in some very unusual cases, but they are there, and I've seen them with small business. You have the European Investment Bank. Now, thankfully, David and Brendan will cover this area in no more detail through a case study with Killowen Distillery, etc. So I'm not going to go into this significantly, just to say that in terms of grant assistance, obviously you have the core one for manufacturing. A creative business will be Invest NI once you get to a certain scale. And again, they probably have 5 core programs. They probably have 100 programs, but you actually distill them all down, you'll probably get most of them back into those 5 headings that I mentioned there under the heading. Then you go to tourism NI for the tourism sector. Then you have the local district councils, you have the local enterprise agencies, you have Enterprise Ireland, which I think again David is going to cover in terms of support, and maybe talk to Brendan about. And you obviously have rural development programs that currently I think it's closed, but it'll open again. And obviously in terms of a lot of the not-for-profit business, which I'm conscious are in the seminar today, you have bodies like the Heritage and the Lottery, etc. And they all have a very important purpose depending on where you go. I thought it was important today to focus a little bit on the alternative sources of finance that we're seeing more and more businesses utilize because of that changing banking landscape. And we'll talk briefly about some of them here. The business angels. The business angels, by the way, is a thing you're hearing more and more about. Really what they are is they're normally networks of successful self-made entrepreneurs who look to acquire shares in potentially lucrative early stage companies using their own funds. And it's fair to say they tend to invest between 15,000 and 150,000 in startup or other early stage businesses. A very attractive scheme you may have heard about is a thing called the EIS, the Enterprise Investment Scheme, operated by, facilitated by HMRC. And really what this does is this provides tax relief to normally high taxpayers who invest in businesses that meet specific criteria. And it can be a great help for SMEs in trying to attract finance. And finally, you have venture capital. Venture capital provides really long-term monetary investments in exchange for equity in the business. It's a form of risk capital, as we highlighted earlier on. And unlike bank debt, no guarantee of repayment of interest. Now, it's fair again to say it's difficult to generalize, but certainly in our experience, the majority of venture capital firms target business requiring at least an investment initially of over £150,000 to fund investment. Very useful for MBOs, managing buyouts or managing buy-ins. And it's also fair to say that most venture capital companies would like to be thinking of exiting within 5 years from their investment. Now, you then have these emerging things over the last couple of years. You have peer-to-peer loans and you have crowdfunding. Peer-to-peer lending platforms, like, for example, the Funding Circle, which has become quite common in Northern Ireland, they arrange loans from groups of individuals or organizations to entrepreneurs looking to grow. Certainly, it's a way for a business to get funding without having to visit a bank. Lenders can use the platform as a marketplace where they choose who they want to lend, etc. Just be careful if you're using it to check the costs. The costs are important. In terms of crowdfunding portals, they offer many lending opportunities for startups and entrepreneurs. They can pitch, where you can pitch on crowdfunding websites. I'm sure some of you will be familiar with these, for a sizable investment in your business model. Multiple investors can invest through this form, and certainly it is becoming a little bit more common compared to traditional forms of finance. And one of the key points here is it's not always directly repaid. Startups may instead, for example, opt for offering their investors some form of service in return for their financial support, for example, a sample of their product or something. I don't plan to go into the loan funds, but suffice again, if you're in expansion mode, White Rock Capital, for example, who manage this is basically based on the Invest NI access to finance strategy. The first 3 are obviously loan schemes. You have the small loan scheme, which is really 15,000 to 100,000. There's a fund of 8 million there, but the next 2 are managed on behalf of Invest NI, who put money into them, but White Rock Capital manage them. And again, they're very attractive depending if they suit where you are. They normally, it can be quite attractive to come alongside. It's back to the mix we talked about earlier on, to come alongside quite often debt or equity finance. The bottom 3 I'm not going to refer to, but there are other forms of equity finance which are actually supported via the government, via Invest NI. But obviously, they're only part of the money going into the funds. There's other private equity, private investors investing as well. So what we're really saying here is, if we're being honest, we just pause for a second. Despite all the changing environments, it's still the basic principles when it comes to debt financing. You borrow for long-term needs with long-term debt. You borrow for, if you're doing a massive expansion of many years, you fund it over 5 to 10 years. You borrow for short-term needs with short-term debt. For example, it was working capital finance. And then you match the term of the loan and the HP agreement over the expected economic life of the asset. Now, it's fair to say that there is a difficult economic climate out there, but thankfully, as you heard from Richard Ramsey, just at present, the signs are very exciting that we're coming out of it, and there's good opportunities. And in our experience, businesses will get finance. But again, it's a shrewder market. You just to be a wee bit smarter than you were in the past. I think just before concluding, it's fair to say that it's important to understand how the lender assesses your project, because to be smart, you know, it's the old story. You're better focusing on those issues rather than talking about all the rubbish you might think you'd like to talk about. So in terms of what the lender looks at, it's back to the basics. Get it in there. What is the purpose of the funding? Straight up. Don't, after 3 sentences, if you haven't stated that, you have a problem. What are you looking for the funding for? And then it's fair to say the lender will then be looking for a little bit of background in the business function. What's it do? What does the business do? Who's the current leaders? What's their experience? What's the business structure? Is it a sole trader? Is it a partnership? Is it a limited company? How long has it been trading for? What's its customer base? Don't say our customers are X are great and they love us. No. A little bit more subtly. What's the quality of your customer? You know, where's the location of your customers? What contracts, if any, have been signed? What's the business track record? And then the key risks. Don't wait for them to assess them. You show your smartness that you've identified what you believe are the key risks of the business, whether it be material prices, whether it be supply chain, whether it be availability of labour, whether it be Brexit, whatever it is. Stick it in there. Address it in your proposal. And finally, then, your unique selling point. You heard Brian talking about that there shortly ago. That's the key. What is your unique set? What is the business opportunity you're presenting that you're seeking access for finance for? That the access to finance person you're going to give it to you believes this is well worth taking on. And in that concept, they'll ask for details of your current facilities. Be aware of that. They'll ask you how do you operate your facilities. They'll then ask you, the first time you make an application for finance, that's your best time. Whenever somebody's coming back asking for more and more information, not good. So get it in day one. Basically, your most recent financial statements are relevant. You're on a startup the last 2 years, auditors are certified, your most up-to-date management accounts. Financial projections becoming far more important, in particular, cash flow. Cash flow is a buzzword now. You've got to have your cash flow projections. Never mind the bank, you have to run your own business. Obviously, it needs debtors and creditors listing 6 months bank statements. That's very important now. And that's why you need to be careful. They're going to look, you can tell them all you like, but the first thing they're going to do is look at how you have been operating your bank account for the last 6 months, no matter where it is, if you're going to a new bank lender. And then confirmation that your tax affairs are up to date. Now, finally, what they will do on the other side is, believe it or not, it's important you understand this, they will assess the risk of your proposal to them. And they'll do that under 5 categories. They'll look at management risk, first of all, the ability of the owners in management to run the business successfully. They'll look at the expertise, experience, qualifications, your previous, it doesn't have to be in the business, it could be in sport, it could be in the church, it could be anywhere. But they will be looking now and again if there is opportunities for previous financial and management opportunities. They will look at the sector. So no matter how good your business is, they will look at the sector, what they consider, for example, if it's a declining market, if it's not. And again, they look at whether they're overexposed to the sector. They'll then look at, from their point of view and your business point of view, the financial risk of your proposal. And they'll go into all that. And you can see I'm not going to bore you now. They'll then look at a very important thing called the debt service capacity, because they want to know what is your ability to repay them. Finally, then the last 2 risks they look at is collateral risk. It's fair to say that there's no doubt about it, a lender will always wish to be repaid from the primary source of the business, the cash flow. However, they do quite often look for security, and definitely for SME borrowing, you may find in some instances they may seek to have collateral cover for their loan. They may ask even for an asset. They may even ask for you to have money in a separate account that they can take access collateral to. And finally, they'll look at the transaction risk, which is each lender will have its own credit policies in relation to lending to different sectors. And again, they'll have their credit appetite. And that could be nothing to do with your proposal. It could just be at a particular point in time they may think they're overexposed to the sector. So that's been a really quick run through a subject matter that thankfully you could spend hours on, or you can get a quick oversight. And hopefully I've set the scene for a quick oversight of the subject matter. And just to conclude by saying, as sure as night follows day, individuals and businesses, if you think about this, make choices every day. And certainly in terms of accessing finance, that's the case. And leadership, individuals and business actions matter and can be a force for change. So really what we're really suggesting here is that businesses must increase their level of finance sophistication and governance to enhance their access to finance capability and the future sustainability for their business. By early engagement, seek negotiation of bank facilities at least 3 months before they expire. Maybe take the letter out you never took out before. How do we look at that bank facilities letter? Please, it'll pay off. Obtain professional advice before seeking concessions from your lender. Really important, because you need to understand the current forbearance rules. If you don't understand them, it can be the start of a very slippery road. You need to robustly manage your debt facilities, ensuring adherence to covenants. Please have a look at, whenever you did the bank facilities there, please don't put it away and never look at it. Have a look at the covenants you committed to in terms of continuing to access that finance. Stress test your cash flows. Basically look at different alternatives if things happen, because let's be fair, none of us knows what's going to happen tomorrow, but it is not unreasonable to carry out reasonable risk stress testing. And finally, don't be afraid. Open the shoulders. Go for it. Lead change to create a resilient business framework. Nothing to be afraid of. All to go for. Onwards and upwards. But always operating in the context that there are business risks. Over to you, Eamonn. I'll just close.
Thanks, Feargal, for that very comprehensive and, pardon the pun, on the money presentation. Given our time constraints, I'm going to propose we move straight into David McComb from Full Circle on access and support programs. And if we get a bit of time at the end, we'll deal with any questions. And if not, if you can send them into the chat box, we'll try and come back to you. So, David, can I leave the floor open to you to talk about access and support programs, please?
Super, Eamonn. Thanks very much indeed for the introduction, and to Feargal for his presentation. I had one of those heart-stopping moments whenever Feargal talked and all this stuff on grant assistance David's going to talk about, because we probably hadn't compared notes as well as we might have, but thankfully I think we have it all covered. So you're going to have up to 15 minutes of myself, and then Brendan Carty from Killowen Distillery is going to join us, and Brendan and I are going to have a conversation that, again, be great if you can join us for that, but also if you have any questions, then we can pick those up at the end as well. So, Eamonn, we're working between Brendan and myself to about 20 minutes or thereabouts between us.
The clock's saying 22, David, so 20 would be perfect.
Yeah, because do we need to leave some time for Q&A? Okay, so I'm just looking at you, Eamonn. Can you see my screen okay there?
I can just see you. I can't see your slides yet, David.
Apologies, hold on a second. And you can just see me. Apologies, let me try and get this resolved. So I've frozen completely.
Well, can you talk us through it, David, and we'll maybe send the slides out after?
Yeah, apologies.
David, if you want, I can share screen. I have your slides here. It's Jessica from the chamber.
Yes. Hi, Jessica. Yes.
Is that okay,
can you
David?
see my screen?
Slides?
Perfect. Thank you very much.
Okay, 2 minutes. Yeah. Oh, there it's. Yours is up now.
Is mine up now?
David.
So everyone can see that. Okay. Super. Thank you very much. Okay. So want to talk about accessing programs of support. And there's lots that's out there. What I would ask everybody to be is something you're probably not asked to do very often, is to be selfish and to look at this through your eyes. So again, rather than generically just considering all the options that are available, do think about your business, do think about what you're doing as an organization and what you need and what you might benefit from. Think about the problems you're trying to solve. Quite often when we go for support, we look to see what's free, what's available, and then try and shoehorn what our needs into that. It's a much better way to come at it, to think about what do I actually need in my business, and then what support might be out there to help me, because chances are there's something there that can help you, whether it's direct grant assistance or whether it's something along the lines of consultancy support. But there's a wide range of supports available there. So the purpose of this session, very much to identify and describe the benefits and what's out there. Range of sources of support. I'm going to concentrate on 5 main areas. I will mention some others on the way through, and I would suggest, certainly if you want to go deeper on any of these, your first port of call should be to go to the websites of each of these. And again, there's a wealth of more information. I couldn't possibly convey everything that's in there to you over the next few minutes. Invest Northern Ireland, certainly. Enterprise Northern Ireland, your local authority, in this case, Newry, Morning Down. The two colleges, and it was interesting, Brian from Delhi Lights mentioned the value that SRC had been to the organisation. So certainly, again, in this part of the world, SRC and CERC, and obviously Intertrade Ireland as well. And these were mentioned in passing by Feargal as part of his presentation. There are some others available. I just want to mention those in passing because they may be more appropriate to your circumstances. We've had a wide range of people on the call, so lots of different interests being represented. Newry Chamber, obviously. Eamonn's Business Improvement District, again, there are supports in terms of workshops and guidance and direction available there. Three government departments that are probably most relevant in this case, Economy, DERA, and Department for Communities, who again offer a wide range of various supports depending on the nature of your organisation. If you're a business, if you're a social enterprise, if you're a startup, if you're a larger business, it depends on the nature of what you do, who might be the most appropriate person or organisation to provide support. Certainly FSB, and I know Graham is on the call from FSB, provide a range of services as well. One that maybe isn't as well known in some areas, and it's Belfast-based, the old Mackey's plant on the Springfield Road in Belfast, the Innovation Factory. So again, if you're an organisation that's interested in innovation and new ways of doing things, they provide incubator units, but maybe more importantly, they provide lots of guidance, lots of workshops, and spaces there to really leverage your innovation if that's what you're into. The three at the end as well are other options, not necessarily specific organisations, but professional bodies for sure. So again, if there's a professional body that represents, or a trade association that represents what you do, there may be support there as well. Some of that may be mentoring support, maybe workshop style support, or there may be funding available also. Networking organisations such as BNI, of course, and of course third-party providers, organisations such as ourselves, consultancies, other bodies who will be able to provide, in some cases, direct assistance, and in other cases, they will be the delivery agent from some of those organisations that I've mentioned. The recurring themes that you tend to find, and I guess these will be the reason why many of you are listening in on this particular workshop. Starting a business, lots of support available from a range of sources. Growing sales is obviously a common theme, and again, something we'll pick up on later in the presentation. Export for sure, and again, that's very much driven from the highest level. It's how we see whether it's recovery or whether it's growth coming from sales growth and from export growth. Innovation for sure. Digital transformation, and again, particularly over the last 15 or 16 months, we've seen an increased amount of provision for digital transformation against a whole range of requirements, from digital marketing to improving your website, to SEO optimization, to going on to e-commerce for the first time, or improving what your offer is there. Certainly COVID has been a theme where there's been lots of additional supports made available. Brexit, or rather, I suppose more accurately, post-Brexit, again, much support still available there, particularly probably looking at Intertrade Ireland for that. Job creation for sure, again, the measure for the use you've made of the grant that has been made available to you is very often around how many jobs have you created. And certainly there's lots of opportunity there for staff development. So if you tick any of those boxes, or if you tick a number of those boxes, what we're going to cover over the next few minutes will give you a taste for places you might go to access support. And you will find that in some cases, there may be several providers that are right for you. So again, there may be some research to be done in terms of which is the most appropriate, because one may nullify the other, but in many cases, you may be able to access both. Firstly, Invest Northern Ireland, the availability of help through Invest is simply staggering. There's a huge amount that can be offered there. So again, I would implore you, if you think that there's something that you might need in some of these areas, to go to the website, dig much deeper. Some of these are areas that Feargal covered on, some are things that I've already mentioned. And again, in some cases, you don't have to be a Northern Ireland or Invest NI client business. There are a number of supports that are available for first timers, for people just starting to dip their toe in the Invest Northern Ireland water. The one that is particularly pertinent, and although again the clock is really ticking on this one, it's very much the 11th hour, the next call for innovation vouchers, which can give you £5,000 towards your innovation in terms of product, service or process. The close for that deadline is tomorrow. And again, that gets you up to £5,000 of support. All you do is pay the VAT amount on that. If you're looking to develop products and services, you're developing strategy, you're wanting to get into new markets, there's lots of help there. What I also want to draw your attention to is the Business Information Centre. Previously, you would have probably had to have gone and visited the Business Information Centre to get market information on a market that you want to move into and a sector that you want to do business in. Much of that is now available by using the email inquiry service for the Business Information Centre, and it's certainly something that I use extensively and have found that to be hugely useful, both in terms of research for our own business and in terms of more often research for client businesses that we work with. And also draw your attention to the NI Business Info website. Invest NI have a team of people who maintain this. And again, anything you can think of in terms of what you might need to help your business, it's second to none in terms of the information that is available there. Enterprise Northern Ireland in a local context is particularly Newry and Mourne Enterprise Agency and Down Business Centre. So again, they provide some lower levels of the long term. They provide different services at a much more local level. That can be industrial and office space if you need some, and again, very often at very preferential rates. Access to good conference facilities, very much focused on startups and on pre-start support. So if you have no more than an idea or a view of something that you think might work, your first port of call is going to be your local Enterprise Northern Ireland agency, and in this case, NMEA or GBC. Certainly lots of support for micro and SMEs, funding support available as well. So again, Eamonn or Feargal talked a lot about funding support. There is funding support available through those organisations. And this isn't just businesses, also social enterprise support is available there. And that body, Social Enterprise NMD, is delivered under the banner of the agencies. The council themselves, again, with the work that all of the local authorities do in delivering economic development, there's lots of local provision, and it really depends on what your need is. If you're starting out, then the Go For It programme that would some years ago have been delivered through Invest NI is now delivered through the local authority. If you want to grow, then Newry, Mourne and Down have the Business Growth Programme, and every other local authority has its own equivalent. If you want to get to grips with digital, and again, other local authorities have similar provision in terms of the local area, the Digital Growth Programme is the one that has been provided. And if you want to start or improve tendering, and again, we've seen significant new demand for assistance in how to tender better. The Tender for Growth Programme is delivered uniquely by the Newry and Mourne Council, by the enterprise or the economic development arena, and again, other authorities have something not dissimilar. So lots of revision through your local authority, regardless of your jurisdiction. And again, in this locality, SRC and SERC both have something to offer. In fact, they've got a lot to offer. And again, if you still take a view that a regional college doesn't have much to offer me, do think again, because again, the provision to local business is significant, and well-resourced teams of people who are very keen to get involved with micro and SME businesses. Everything from research and design expertise, and again, with expert providers in the organisation. Technology technology and knowledge transfer, again, very strong in that area. One-to-one mentoring and consultancy certainly is available. And again, what maybe many of us would consider to be the college's main drive is in delivering customized training and in workforce development. And again, a number of provisions there, many of which are funded or heavily funded or partially funded, with monies coming from DFE to provide lots of services in that area. Student, graduate and academic placements, of course, if you're looking someone to come in on short-term or longer-term placements, CERC or SRC are the places to go. Apprenticeships, both standard apprenticeships and higher level apprenticeships. Again, first port of call should be through the colleges. There may be some easy access to funded support as well, and obviously great networking and partnership opportunities in there too. So again, do remember your local college, and lots of micros and SMEs are now accessing those services. The other major area I want to talk about is Intertrade Ireland, and again, a range of services, post-Brexit support, cross-border sales, innovation support, funding, COVID-19 impact, and lots of business intelligence available there as well. Intertrade Ireland do a fantastic job. You will need to meet eligibility criteria for much of the grant-funded work that is done there, and whether that's your manufacturing or a tradable services organization, that you are not overly trading in the other jurisdiction because the drive is on cross-border sales, that you are running and functioning and have been for a period of time as a business. All of these things matter, but if you meet eligibility criteria, there's huge amounts of support available there. And I'm very conscious of the clock beating me here, but I do want to mention just a couple in particular, particularly around sales. Elevate will give you £5,000 of consultancy that doesn't need to be match funded by anyone else. You get access to that, and that gives you consultancy to develop your in-house sales capacity, export readiness, cross-border sales, marketing plans, and so on. And Eamonn will pay up to £15,000, or if that's half the salary of a salesperson for the first year in the jurisdiction. So if you're a northern business trading south, there's a huge incentive there to put boots on the ground, to put a salesperson in the other jurisdiction, and for that to have a huge impact to your business. There are 120 or 130 businesses every year avail of that service, north and south, and it has a huge benefit. There's also to go to tender as a tendering support service, as well as if you're an innovation business, there's huge support available by putting graduate and working with third level institutions on the ground through what was previously Fusion and is now called Innovation Boost. And finally, from Intertrade, eMerge and Emergency Business Solutions, £2,500 and £2,000 of consultancy support available respectively there, not needing to be match funded, fully supported, again, that you can draw down on. So do access the website for that. Okay, just to say, in terms of what you should do with this, work out what it is you want, what it is you're looking for, where you would like help, and start to connect with these organizations, their newsletters, with their social media. Get out there and do your research, understand what the full range of position is, make contact and apply, and enjoy the benefits of the support that's out there. I would be astonished if there's support that you require and there isn't help out there that might help you in that regard. Okay. I'm going to stop the share, and I'm going to ask Brendan Carty if Brendan would just come off mute, and if he would open up his video. Brendan, how are you? You're very welcome to the session. Brendan, I'll not steal too much of Brendan's thunder. Brendan is the director of Killowen Distillery. So I'm going to ask Brendan a few questions, and we get a sense of what Brendan has done in accessing support, but also in terms of his business. So Brendan, the floor is yours. Who are you? Tell us a bit about the business and what gets you to this point.
Brilliant. Just on your last word there, David, you actually froze. Could you let me know if you can hear me all right?
Oh, yes, I can hear you fine. Yes. Everybody else, Eamonn, can you nod? Can you hear? Yep, yeah, good.
That's good. Yeah, so, well, I'm Brendan from Killowen Distillery. So we're Ireland's smallest whiskey distillery. We've been in operation now for 2.5 years. So we've been distilling whiskey for 2.5 years. And at the start, like all new start businesses, it's a struggle to get yourself off the ground. It's a struggle to find capital. Everything's basically a struggle, but we've actually ended up doing quite well. So outside of making whiskey, which you're laying down for the future, which is massively labor intensive and cash flow intensive, we also create independent bottlings of whiskey. So we buy in whiskies from different places, we blend them together, we age them further, finish them, and sell them on. We've created independent bottlings, and as a result, we've actually reformed the whiskey industry to such an extent that our indie bottlings, they don't last. Anytime we create a batch, they sell out before we can get a chance to even promote them. So it's a really good problem to have, and that's because we know what the consumer wants, and we basically are empowering the consumer with every bottle by giving them full information about what's in the bottle on the label. And as a result, we've actually found ourselves in a bit of bother at times with authorities and whatnot.
Yes.
But so far things are going very well. But again, everything's always a struggle until we're starting to sell our own whiskey, because we're always laying down product for the future that we haven't been able to cash in on yet.
Yes. What's the time frame on that, Brendan? When do you hope to start selling under your own label?
Probably in the next 7 months, 8 months maybe.
Very good. So exciting times just around the corner, yes?
In the meantime, though, we also sell lovely gins and poaching as well. So we had an ambition to premiumize the poaching industry when we first set up. And we've actually been quite successful in doing that. We released a poaching range called Feargal, and it sold out within 2 minutes, 200 bottles. And it created a lot of uproar in the industry. And, so there's a lot of technicalities we can go into about industry standards and things like that we're trying to reform and change. But we're making a hell of a lot of noise, not just in Ireland, but around.
And clearly innovators, Brendan, we're not going to accept the status quo. We're going to, if it needs challenged, you're going to challenge it.
Yeah, we are indeed. We're very outspoken about it. We spend a lot of time in that as well. There's a huge amount of work going on in the background, not just in the business, but also for the betterment of the industry as a whole. And luckily, we've got that extra layer, that ethos, and the fact that we want, and we feel, very strongly about these things.
So if you've been in business 2.5 years, Brendan, over half of that time has been under pandemic. What have been your experiences of the challenges of the last year?
That word pivot's thrown around a lot. I think it's a bit of an awkward word. It's quite a privileged word as well. Some people don't have the luxury. We did have the luxury of pivoting. First thing we done was we were delivering sanitizer, for free to charities around Ireland, and at the same time, we'd never wasted an opportunity to call into different influencers in those cities and drop off a little sanitizer, but also a drop of our whiskey. And it was whenever all the big guys stopped making whiskey, the market was stunned. Nobody knew what to do, and the whiskey industry has these hardcore enthusiasts that were lying low and were wanting to drink some whiskey, quality whiskey, and so we stepped in and filled that void. There was a 2-month void, and Killowen basically owned that space. And we also launched ourselves online with all the online influencers talking. We're very good at being loudmouthed and controversial and speaking our minds, so that got us out there as well. And from there on, things have just been a roaring success.
Brilliant. Have you just? I'm watching. This clock's at the corner of my right eye here, and it's starting to shout at me. Brendan, I'm interested as well. And have you accessed business support? So the purpose of this session is about support and support you've received. Have you accessed support, and what difference has that made to you?
Yeah, definitely have. Well, first of all, full circle yourselves. I worked with Denise in your company, and Denise was brilliant. And she brought us through the likes of Elevate and Eamonn. So as of yesterday, we've agreed a salary with a brand new employee, which was actually one of the fruits of the Eamonn program. So we're going to have boots on the ground now throughout the south, and taking care of that sales administration, which is definitely going to free up so much of my time. And we've got a very good candidate. We thought the quality of the people applying for the job was phenomenal, and we're delighted to have somebody. She's actually local. She lives in Warren Point, and she's very willing to travel in the Republic as well. So.
But you have an exciting story to tell, Brendan, as well. And again, we're a nation of storytellers, so people are captivated by that story, and just it's the difference. You're so different from, rather than same as, so many other players in what could be seen as a congested sector. What would you say, Brendan, to any business that's listening in here who are thinking, what role might external support provide in my business? Why bother? Why don't I just do it all under my own steam? What would you say if a small business with ambition is looking to grow, in terms of whether they should or shouldn't access external support?
Well, first of all, we all know how difficult admin is, especially in my industry. Admin is crazy because you're taking care of the government's money and alcohol all the time, but and that distracts you. So in terms of applying for government support, it's quite painful sometimes, I find personally, even to get, typical payouts from small grants and whatnot. But I think what Full Circle actually brought to that was the expertise and the efficiency from which they can work through the right advice. I'd say if we were to go it alone, it never would have been accepted. First of all, that we didn't want any market displacement, and that had to be very clearly evidenced. So when we were bringing products to the Republic of Ireland, we had to be careful not to displace any other markets down there. So we led then with our production.
Sorry, Brendan, I'm going to have to interject in that the clock's going to beat us, but thank you and David for your presentation. If anyone has any questions, please send them in the chat box, and we're going to have to go and see Gráinne McCoy next. So apologies for that, and thank you all for the information shared.
Thanks, Eamonn. Thanks, Brendan. Thanks, everyone.
Thanks, Thanks.